Exam Scholar, Real Estate Edition.
Question 1. If an asset is showing a decline in monetary value or a decline in the value of property, this is best known as A. Depreciation, B. Expense, C. Declining value, D. Comparable dispersion. Answer A. Depreciation is a decline in the value of property and, in accounting, is the declining value of an asset. Question 2. In the most basic sense, debt is considered A. Any amount owed to another, B. A credit from one person to another, C. An owed amount with interest, D. Anything of value that is borrowed from another. Answer A. An amount that is owed to another is probably the simplest form of the definition of debt. Question 3. A loan in which the lender makes payments to the builder at periodic intervals as the work progresses is best called A. A short-term interim loan, B. A construction term loan, C. A convertible construction loan, D. A periodic convertible loan. Answer A. A short-term interim loan is a loan in which a lender makes payments to the builder at periodic intervals as the work progresses. This type of loan is also known as a construction loan, but not called a construction term loan. Question 4. Homeowners association fees are also sometimes called A. Common area assessments, B. Condominium fees, C. Common designated conveyances, D. Area commune fees. Answer A. Homeowners association fees are also sometimes called common area assessments. They are paid by the individual owners and are used to maintain the property or common areas. Question 5. A time deposit that is held in a bank that pays a certain predetermined amount of interest to the depositor is known as A. A certified deposit, B. A certificate of deposit, C. An interest-bearing account, D. A time-stamped deposit. Answer B. A time deposit that is held in a bank that pays a certain predetermined amount of interest to the original depositor is called a certificate of deposit. Question 6. If a homeowner refinances the mortgage on the property at a higher amount than the current loan balance for personal use, this is called A. Cash out refinance, B. Reverse mortgage, C. Equity line of cash, D. None of these. Answer A. A cash-out refinance is when a homeowner refinances the mortgage on the property at a higher amount than the current loan. This happens when the current borrower intends to use the money for personal use. Question 7. The final lump sum payment due at the termination of a specific type of mortgage is best called A. A hovering payment, B. A balloon payment, C. A floating payment, D. A deferred payment. Answer B. A balloon payment is a lump sum payment that is due at the termination of a balloon mortgage. Question 8. The best definition of an appraiser is A. An individual qualified by education and experience to estimate the value of real and personal property. B. An individual that works for lenders exclusively to estimate the value of real and personal property. C. An individual that works exclusively independently as a contracted agent to estimate the value of real and personal property. D. None of these. Answer A. An appraiser can work for lenders or they can work as independent entities. They are always qualified by education and experience to determine the value of real and personal property. Question 9. A value created according to a government formula intended to reflect the true annual cost of borrowing expressed as a percentage is called A. PR. B. ARP. C. CPR. D. ADR. Answer A. Annual percentage rate, otherwise known as APR, is a value created according to a government formula intended to reflect the true annual cost of borrowing expressed as a percentage. Question 10. Liabilities, including long-term and short-term debt and any amounts owed to others, is best known as a person's A. Financial obligations. B. Net worth minus expenses. C. Debt. D. Assets. Answer A. A person's liabilities that include long-term and short-term debt as well as amounts owed to others is best called their financial obligations.
Exam Scholar, Real Estate Edition.